Tonight is Thursday, October 21st, and it's 9:05 p.m. Eastern Time. This is the daily chart for the E-mini gold future contracts, specific to the December 2021 contracts. Ticker symbol /MGCZ21. And as of the time of this recording, price is currently trading at $1,787.20, and for the session it's up $5.40. So looking at the daily chart, I did identify 3 support and resistance levels, and since September 30th, since this push up, this daily candlestick up, it's been trending towards on the north side or bullish side, because we have a gradual increase in price here since September 30th, when price was trading at 1723, and right now it's at 1787, so it's about up $60 since then. And the support resistance levels, the first one I identified is, let me just clean this up. So support, resistance, and the first one I identified is 1803.20, and you can see that price here was respecting the resistance here, resistance all through here, support here, resistance here, support here, and if I go back, you have resistance. So the second level I identified, which is, I feel is relevant to this review, is 1780.40. So price was rejected here, and then price finally got above this level here. So this could be now be acting as support. Here it was support, 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 support briefly before falling down. And the last level is 1757.60. So here it was acting as support, and this 1780 was resistance at that time. So here we have resistance, support, right? So if I keep going left, resistance, resistance, resistance. So now that this is all there, what I did was I dropped down to the hour time frame, and what I did was using the open or the close of this candlestick right here from October 15th, and using this candlestick here from October 18th, I drew a channel, so a pitchfork channel. So if I'm using that to this candlestick here, and if I adjust this just a little bit, where I'm getting the bodies, not the wicks so much, but the bodies. So here we have the body being rejected. We do have the wicks piercing it, so I want the body, right? So here, because price had moved this far out, here we got a wick, but after that, price couldn't go any higher and eventually came down. Down here, same thing. I wanted to capture the body of the candles instead of the wicks. So here, this is all wicks, but we have body here, across through the body here, support bodies here, body here, right? And now that this channel gives me a visual representation of where price may go, what I'm interpreting this is that price may head towards this blue line, which is where a majority of the price action is taking place, right? So we have some touches here at the support and resistance, but here the blue, I feel, is where most of the price action is taking place. So here we have support here, rejected here, right? So all of this. So I'm interpreting this as the momentum is going to be pushing towards the upside of this blue and maybe straddle against it for some time before eventually getting over it and higher. So with that, what I did was I was looking for an opportunity to find a trade entry, and that occurred at the 30-minute time frame. And what I did was I saw all of this, right? And actually it was a bit lower right here. So I saw that there was this rejection here, right? So here as well, here, right? So if this line just went across, then this was like another support resistance level. So when this candle started pushing strongly towards the upside, I thought this was the candle that would close here, like somewhere up here, and then the next candle would be above it, which it did, but then, you know, it started coming down a little bit. So this was the candlestick that I entered my trade, and if I show my trade, so here's a pop-up flag. So I picked up one contract, and my entry is at $1,786.10 right here. And since entering this trade, if I click on active trader, here's my one contract, here's my entry price, and this is my P&L right now since entering this trade. So I'm up $10. It was as low as $14 because of this wick down. I thought that the trade was going to go against me, and fortunately the bulls, I guess, stepped in and started buying into it and continued to move higher. So right now, as of the time of this recording, it's up $10. What I'm looking for is 100 ticks to the upside, which would be around 1,800. So my exit price, let me just close this. So my exit price is about 1,800. So I'm looking up here about, or 17.99. So if my entry was here at 1786, 1 is right here. So if I'm looking for 100, so this would be 130 ticks. The 13 plus 13, so that is equal to 130 ticks. So this is where I'm hoping to get filled for my stop. Now, when trading futures, I'm talking about ticks, not cents, because each move up or down is called a tick. So right here, so under the futures, so for MGC, the E micro gold futures, 0.1 is equal to a tick size, right? And each tick is worth $1. So a tick move up or down is equal to $1 and change in profit or loss. Whereas if I was, I don't know why this is blank, but okay. So if I was using the full gold contract where the symbol is GC, this is the gold futures, each tick move up or down is equal to $10, right? So if this was the gold contract, and my $7 would actually be $70, right? So from 1786.1 to 1786.2, that's $10. $20, $30, $40, $50, $60, $70. So this is a $70, right? So if I was using now the reason why I didn't use this is because I'm going into the overnight session. I'm not going to be awake to monitor the trade. So I thought I would reduce the risk by trading the mini gold futures. Otherwise, I would have considered the full gold contract. But, you know, again, because going into the overnight session, I won't be able to manage the trade. And because of that, that's why, so like this move right here, right? So a measure of this move, this candlestick each candlestick represents 30 minutes. So the size of this move is 7.1. So that's a $700 loss. If this trade went against you, this candlestick alone is $700 change or drop. So if you're a bullish, let's say you bought in here at the bottom thinking, oh yeah, price is going to reverse. If you weren't monitoring your trade carefully, you would have, this 30-minute candlestick would have cost you $700. So, yeah, so that's the rationale for this trade. What I'll do is I'll put my stops in place. I'll probably put like a 20 tick stop for the overnight session in case price does come down. 20 ticks below my entry price, it'll close me out. And then I'll pick it up in the morning. So until the next few hours, I'll see you later. Today is Friday, October 22nd, and it's 7:42 a.m. So the overnight session is now pushing higher. So right here we can see the 230 candlestick at the 30-minute was a big push towards above the blue line, and it's now acting as support. So that's a good thing. Right here, this is my take profit, and this was my stop that I had placed last night. So this is an OCO order, a one cancel other order, which is two orders, but would fulfill one order essentially. So if this order got triggered last night, it would have closed me out and then also have canceled this order, and vice versa. So if there was a reversal last night and I got stopped out because price was dropping, then this order here, this take profit order, would have been canceled as well. So what I'm going to do now, it's just a matter of trade management at this point. So what I'll do is I'll cancel this. Well, I'll keep this alarm, because if price triggers this alarm, I'll be notified to adjust this take profit level. I may push it even higher, and of course I'll move my stop like right below this blue line, the horizontal plane. So this way, if price starts ticking towards the downside, you know, I'll protect my profits, because my entry was right here at the bottom of this trend line, this blue trend line right here. So this was my entry, and yeah, so it's just a matter of trade management at this point. So, and as of this morning, if I click on active trader, the trade is now up $79. So I was anticipating a move much higher for this trade to be completed. So I've got another maybe $50 left into this trade. Depending if I see a strong push towards the upside, of course I'll move it up. but if it's just a slow grind, I may close it out before the weekend, before the market closes tonight at 6 o'clock, because weird things happen over the weekend. So if I'm still in this trade after tonight, going into this weekend, crazy things like when the market opens Sunday, it could have a sharp downturn, right? So I could just pick it up. So if price comes back down, I'd look for an entry somewhere in this blue, along the blue line. But again, it's just a matter of reassessing the chart. But yeah, so far so good. And I'll pick it up later. So just quick update. I just got stopped out at my support resistance level of 1803. I was I was in the kitchen having breakfast, and I didn't think it was going to hit or spike up this strongly. But yeah, I got stopped out. Price broke above the resistance, this purple resistance level, as well as it broke right above it broke through the 1803 resistance level. So I'm kind of bummed I didn't get a chance to move my take profit higher. But my profit is $171. I'm totally out of the trade. I don't have any contracts open. And it looks like it's going to keep running. I'm kind of bummed, but it is what it is. So yeah, I thought it was gonna be a slow climb up. I didn't think it was just gonna punch right through, especially at a low time frame, like a 30-minute time frame. So we got two back-to-back pushes up. So this to me is a good sign, because now the market is really bullish from my perspective anyway. So the cash market's gonna open in about 45 minutes. So I want to see if this is going to reverse. Maybe people will get out of this because, get out of gold and into stocks. I don't know. I'm gonna take a look at that in a bit, but that's it. I'm out $171 profit. And if this was the actual GC contract, this would have been $1,700, because each tick is $10, but it's okay. Yeah, until the next trade, I'll see you.